All right, let's dive in. We're going deep on the Russell 2000 today.
Oh, interesting.
Yeah, see if maybe we can uncover some kind of hidden treasure for investors in small cap land.
Well, caps, good stuff.
Yeah, and to help us navigate this, we're going to be looking at an article from The Motley Fool. I think most people probably know them.
Yeah, great resource.
Really great at making investing a little less intimidating.
Exactly.
So first things first, while all those big major indexes are practically popping champagne near all-time highs,
Yeah.
the Russell 2000's taken, well, a bit of a dip, getting close to what they call correction territory.
Yeah, almost 9% down from its peak.
Almost 9%.
Which is pretty intriguing.
It is interesting. Like, why is this happening?
You know, you got the star players out there winning, but this guy's sitting on the bench.
Yeah, what's going on with this? Why is this little guy lagging behind?
Well, I think part of the story's got to be about, how we value these companies. There's a massive difference in how the market is valuing S&P 500 companies compared to these Russell 2000 companies.
Okay, so we're talking about, like, the price tag.
Yeah, price tag, and when you look at something called price-to-book valuation,
Price to book, okay.
it's the widest gap we've seen in 25 years.
Wow, 25 years. That's significant.
Yeah, really is.
So it sounds like investors are going all in on those big S&P 500 companies, but maybe they're missing something with these smaller players.
Right, exactly.
Is this our chance to, like, get in on the ground floor?
It might be.
Okay, all right.
It's a good question.
Okay.
Great. And what makes it even more interesting, back at the start of 2024, this analyst, Tom Lee, he actually predicted that this gap would shrink.
Okay.
He thought, falling interest rates would actually help boost the Russell 2000, made it his top pick for the year.
So he was like, this is the one.
This is the one, yeah.
Okay, but, 2024 hasn't been the year for underdogs, has it?
Not so much, no.
Gap actually got even bigger.
Got bigger.
So what happened? Why didn't his prediction come true?
Well, a couple things I think happened. First, mega cap tech stocks.
Yeah.
They kept right on winning.
They did not slow down.
Didn't slow down, especially those kind of riding that AI wave.
Absolutely.
I mean, they were a major force this year, pushing that S&P 500 higher and higher.
Yeah, big tech really had its moment, that's for sure.
For sure.
But, could things be changing? Did something shift?
Maybe.
What else was contributing to this gap besides just, big tech?
Well, throughout the year, we saw some pretty strong economic data.
Yeah.
And that kind of led to some shifts in interest rate expectations.
Okay.
And, you got to remember the S&P 500, it leans heavily towards tech companies.
Right.
And tech, generally, they tend to have higher price-to-book ratios anyway.
So a combination of tech dominating and then just like the inherent way that we value those different types of companies.
Yeah, it's a bit of both.
Interesting. Well, let's talk numbers for a sec because I think it helps illustrate this.
Okay.
So for 2024, S&P 500, pretty decent return, 26%.
Yeah.
The Russell 2000, only 12%.
Yeah.
Pretty significant difference.
Significant, yeah, an extra 14%.
14 percentage points. That's not nothing.
Not nothing at all.
No, not at all. And then as of, I guess, late December 2024, average company on the S&P 500, a price-to-earnings ratio, or as we call it, PE ratio, about 28.
Right.
And a price-to-book ratio of 5.
5, yeah.
Now, compare that to your average Russell 2000 company.
Okay.
PE ratio below 19, and a price-to-book ratio of 2.1.
Big difference.
So I think we've established there's this big gap in how the market is valuing these companies. But the question is, could this be a good thing?
Could this actually be a good thing?
The question, right?
Yeah, for someone like you, me, anyone out there listening who's thinking about, like, where should I put my money?
Right, where are the opportunities?
And this is where it gets interesting, right? So we've been talking about falling interest rates.
Yeah, we keep coming back to that.
We keep coming back to that, and I think it's because they could be a real game changer for the Russell 2000.
Okay, I'm listening. Break it down for me.
All right, so think about it this way.
Okay.
Smaller companies, they often need to borrow money to grow their businesses.
Yeah, they got to get that capital.
Got to get that capital, and when those interest rates drop, it's like they're getting a discount on their expansion plans.
Oh, I see.
Makes them more appealing to investors who see the potential for, greater profits down the line.
Okay, so lower rates basically could make those small caps more attractive to those investors.
Yeah, the ones looking for growth, yeah.
That makes sense. But, isn't there also a risk that those same investors could get kind of spooked?
Sure.
And shy away from these smaller maybe riskier companies?
Yeah, I mean, there's always a balance.
Yeah.
But there's another piece to this puzzle that we should talk about. When safe investments, things like treasury bonds, when those become less appealing, and that happens because of falling interest rates,
Yeah, okay.
investors, they might start looking for better returns in the stock market.
They got to put their money somewhere.
Got to put their money somewhere, exactly.
Right.
And a lot of times that search leads them right towards those small cap stocks.
Okay.
Because of that potential for higher growth.
So it's like a ripple effect almost.
It is, yeah.
Lower interest rates kind of shift where people are putting their money.
Yeah, changes the whole landscape. And
Fantastic.
Speaking of shifts, we can't forget about the incoming administration and their policies, right?
Oh, right. Yeah, of course.
That plays a part.
Politics. Gotta love it.
Gotta love it, yeah. Always impacting the market.
Absolutely.
So some analysts are thinking that this new administration could lead to a more business-friendly environment.
Okay.
And, that could be really helpful, especially for those smaller businesses.
Right, trying to compete.
Exactly, trying to compete with those big players.
So you're talking lower taxes, less of those regulations, red tape.
Yeah, less red tape, exactly.
Level the playing field.
Level the playing field.
But wouldn't that benefit all businesses?
It would, yeah, to some extent.
Yeah.
But smaller companies, they often feel those changes more acutely.
I see.
They don't have the same resources as bigger companies to navigate, all those complex regulations.
Okay, yeah, that makes sense.
So, yeah, a more streamlined environment could really give them a leg up.
Give them a head start.
A head start, yeah.
Okay, so someone's listening to this and thinking, okay, small caps, I'm interested, maybe this is my, chance.
Yeah.
Where do they even begin? Where do you even start?
Well, the Motley Fool article that we were talking about, they highlighted an ETF called the Vanguard Russell 2000 ETF.
Okay.
Ticker symbol VTWO.
ETFs. Gotta love them.
Gotta love them.
Way to diversify, make things a little easier.
Yeah, those baskets of stocks.
Yeah, exactly. But, there are so many out there.
There are.
What makes this one, this VTWO, special?
Well, so this one tracks the Russell 2000 index, which means it gives investors a pretty broad exposure to those small cap stocks that we've been talking about.
Okay.
And a lot of the experts seem to think this ETF could be a really smart buy right now. Not just for 2025, but potentially for long-term growth, too.
The long game.
The long game, that's what it's all about, right?
That's the goal, right?
Yeah, that's the goal.
But I got to ask, I'm always a little hesitant.
Sure.
When everyone's like, this is it, this is the thing.
Right.
Isn't there a chance that this is just a temporary, blip?
Of course. There's always a chance.
Yeah.
But to put things in perspective, let me tell you a little historical fun fact.
Okay.
The last time there was this wide of a gap between the valuation of small caps and large caps, small caps actually outperformed large caps for over a decade.
Over a decade. Wow.
Over a decade, yeah.
So, are we seeing history repeat itself?
It's possible. It's certainly something to think about.
It's a lot to consider.
It is, yeah.
Obviously, past performance doesn't guarantee anything in the future.
Right. Of course not.
But it does at least, give us some idea.
Yeah. Gives us some context for what might happen.
It's like we're looking back at an old map.
Yeah, that's a good analogy.
Trying to figure out, okay, where could this road lead?
Where are we headed?
Exactly.
What are the potential detours we might encounter?
Yeah, are there any roadblocks we should be, aware of?
Oh, for sure. Always roadblocks.
Right.
Yeah, definitely. Always roadblocks. Yeah, but, even though, this valuation gap and the idea of falling interest rates, it paints a pretty good picture for, small cap stocks.
Right.
We got to remember, investing, never a sure thing.
No, definitely not. There's always risk.
Always risk.
So what are, the clouds on the horizon? What are the things we got to be watching out for?
Well, we've seen how tech has really kind of driven the market this year. Yeah.
What if that momentum, starts to fade?
Right.
A shift in investor sentiment away from tech? That could have a ripple effect across the entire market.
Yeah.
Including small caps.
So even if, everything looks good on paper with small caps,
right,
they could still get, pulled down if the whole market takes a hit.
Yeah, they could get caught in the undertow.
Caught in the undertow, yeah.
Exactly. And then you've got, those geopolitical risks.
Right. Always fun.
Always fun. Yeah. Who knows what's going to happen in the world?
You never know.
Crazy stuff can happen and just, throw a wrench in everything.
Absolutely.
Even the best laid plans.
Right.
And that volatility, that uncertainty, that can spook investors.
Yeah.
Make them want to pull back from those riskier assets.
Especially those small caps.
Especially small caps, yeah.
Yeah, they're a little bit more, Volatile, yeah.
Yeah.
So how do we balance this, this potential for small cap growth with, the very real risks, right?
That are just part of the game.
Yeah, and that's where I think you got to use your brain, right? You got to think critically.
Think critically.
Got to look beyond just the headlines, really dig into all the factors that could be impacting the market.
Yeah.
And that's, this is what we're doing here. This is just the start.
Yeah, it's just a starting point.
Just a starting point.
Getting people thinking.
Exactly. Getting people thinking, getting them curious.
Right.
Giving them some tools, so they can make those good decisions.
So you're giving us the map, but we got to choose our own path.
Yeah, choose your path.
Okay, so what are some questions, like key questions I should be asking myself if I'm dipping my toes into the small cap pool?
Well, first of all, you got to know yourself, right? What's your risk tolerance?
Okay.
How comfortable are you with, maybe some bigger swings? Small caps, they can be a little bit more, a little wilder.
A little bit more of a roller coaster.
Yeah, than those, steady Eddie large cap stocks.
Right. It's like the difference between, like a nice walk in the park.
Yeah, nice walk in the park.
And a crazy roller coaster.
Exactly.
Yeah.
And then you got to think about what you're trying to achieve, right? What are your goals?
Goals, right.
Are you looking for some quick gains?
Yeah.
Or are you in it for the long haul?
Right.
Because small cap investing, it's often more of a long game.
It is, yeah.
Requires patience.
Patience.
Willingness to ride out those ups and downs.
Yeah, those bumps along the way.
Exactly, the bumps along the way.
Okay, so it's like, planting those seeds.
Planting seeds.
And then letting them grow.
Letting them grow, yeah.
Not expecting to, have a harvest the next day.
Exactly.
Yeah.
Exactly.
Okay. All right, and then
how much time are you willing to put in?
Oh, yeah.
Because these hidden gems, they sometimes require a little bit of digging.
Yeah, like real research.
Real research, yeah. Got to do your homework.
Like panning for gold.
Panning for gold, yeah.
Got to sift through.
They sift through the dirt, yeah.
To find those nuggets.
Find those nuggets, exactly.
Okay.
And then finally, are you comfortable with this whole world of ETFs?
Right.
Do you get it?
Yeah.
Or would you rather, have a professional in your corner,
Mm-hmm.
maybe a financial advisor, someone who can give you some personalized advice?
Yeah, having an expert can be helpful.
Oh, for sure.
So, let's say someone's listening to this and they're like, okay, this VTWO, this Vanguard Russell 2000 ETF.
Yeah.
It's sounding pretty good.
Yeah.
What are some of the key things they should know about this specific ETF?
Well, one of the best things about it, I think, is that it has a really low expense ratio.
Okay, and remind me what that is.
So that means you're paying less in fees
Oh, okay.
than some other ETFs, which can really add up.
Fees, you got to watch out for those.
You got to watch out for those. They can eat into your returns.
Yeah.
So that's a big plus.
Yeah, I mean, everyone likes saving money. Everyone likes saving money.
But besides just being cost effective, what else makes VTWO appealing?
Well, it gives you a lot of diversification.
Okay.
You're not just, putting all your money on one horse.
Right.
You're investing in a whole bunch of different small cap stocks, over 2,000 of them actually,
Wow.
spread across different sectors.
Oh, okay.
So that diversification, it helps to spread your risk and potentially leads to some more stable returns over time.
Okay, it's like that old saying, don't put all your eggs in one basket.
Don't put all your eggs in one basket.
Yeah.
Spread them around.
But how do we know if this basket, this VTWO basket, is actually a good investment?
Right. Yeah.
I mean, I know past performance doesn't guarantee anything.
Doesn't guarantee anything.
But can give us some clues, right?
Yeah, it can. It's kind of like checking the weather forecast.
Okay.
Before you go on a hike.
Right.
It might not be perfect.
Yeah.
But it gives you an idea of what to expect.
General idea. Yeah. And when you look at VTWO's historical performance, it's generally been pretty much in line with the Russell 2000 index.
Which, as we talked about, has shown some pretty good long-term growth.
Long-term growth, yeah.
So is it safe to say that VTWO could be a good option?
Potentially, yeah.
For someone who's just looking for a simple, diversified way to get into small caps?
Yeah, I think it's definitely worth considering.
Okay.
But, always do your own research.
Always.
Make sure any investment aligns with your goals and your, risk tolerance.
Absolutely.
Don't just jump in blindly.
Right.
No.
Okay.
Okay.
Now, you mentioned earlier that small cap stocks can be a little bit more volatile
Yeah.
than their large cap counterparts.
Mhm.
Can you maybe elaborate on that a little bit? What makes them so jumpy?
Well, think of it this way.
Okay.
Smaller companies, they're kind of like speedboats.
Speedboats, okay.
Yeah, they can zip around, react faster to changes, maybe hit those high speeds, but they're also more likely to get tossed around.
If the water gets rough.
If the water gets rough, exactly.
Okay.
Whereas those big, large cap companies, they're more like those giant cruise ships.
Yeah, those cruise ships just kind of...
They're steady.
Yeah, just plod along.
They're stable. They're not turning on a dime.
Right. Yes,
and, that agility for small caps, that can be a good thing and a bad thing.
I see.
They can grow really fast, but they can also be more vulnerable if the economy takes a downturn.
Right.
Or if there's a lot of turbulence in the market.
So if the economic seas get rough...
Yeah, if the seas get rough...
Those small boats are
They're going to feel it.
Feel a lot more.
They're going to feel it more, yeah.
Yeah, okay.
And another thing is, smaller companies, they often just don't have the same access to capital as those bigger, more established companies.
Like they have a smaller gas tank.
Yeah, smaller gas tank.
Yeah.
Maybe they can't weather the storm as well.
Right, exactly.
And they might struggle more when it comes to, funding their growth or dealing with, those tough economic times.
Okay, that makes sense.
Yeah.
So higher potential for growth, but also higher potential for risk.
It's a trade-off.
It's a trade-off, yeah.
It is.
Okay, so what about those hidden gems that you talked about before?
Yeah.
Like the companies that are under the radar, but they're,
diamonds in the rough?
Diamonds in the rough, exactly.
Yeah.
Poised for big growth. How do we find those?
Well, that's the fun part, right?
Yeah.
It takes a little bit of detective work.
Okay.
You gotta dig a little deeper, look beyond just the headlines, really understand the companies you're considering investing in.
It's not just about looking at the numbers.
It's not just about the numbers, no.
Yeah, it's about understanding
the story behind the numbers.
your story, yeah.
Exactly.
Okay.
So you got to look for, companies that have good management teams, strong balance sheets, a competitive edge.
Right, so not just riding a trend, but actually building something.
Building something real, building something sustainable.
Sustainable, yeah.
Yeah, and that takes time. It takes effort.
It does.
You got to read those industry reports, follow the company news, get a sense of their, long-term vision.
So it's not for the, the passive investor.
No, not really.
This is for someone who wants to
roll up their sleeves.
Roll up their sleeves, yeah.
Yeah.
But for those who are willing to put in the work, it sounds like it could be worth it.
It could be worth it, yeah, big time.
Okay, now, earlier we talked about Tom Lee's prediction.
Yeah.
That falling interest rates would help the Russell 2000.
Right.
But then you pointed out that the gap actually widened.
Yeah.
Throughout 2024.
Throughout the year.
So what does that tell us about, the reliability of these predictions?
Well, I think it's a good reminder that the market, it's a complex thing.
Yeah.
It's unpredictable.
It's very unpredictable.
Yeah. And even the smartest analysts, they can get it wrong.
They can get it wrong.
They can get it wrong. There are so many factors at play.
Right.
You can't always predict what's going to happen.
It's like trying to predict the weather.
It is, yeah.
Months in advance.
Months in advance, yeah.
You can look at the historical patterns and make your best guess, but...
Yeah. But Mother Nature,
She does what she wants.
She does what she wants, yeah.
Yeah.
And the market's kind of the same way.
Right.
It's influenced by so many things.
So many things.
Economic data, interest rates, what's happening in the world, how people are feeling.
Investor sentiment, yeah.
Yeah, investor sentiment, all of that.
So we can use these predictions as a starting point.
As a starting point, for sure.
But we should always be a little skeptical.
A little bit skeptical, yeah. Do your own research.
Do your own research.
Weigh the evidence. Make your own decisions.
Make informed decisions.
Yeah. Informed decisions.
Okay, so we've talked a lot about the potential upside of small caps.
We have.
But let's be real for a second.
Be real.
What are some of the downsides, the risks, the things that people really need to be aware of?
Well, we've already touched on volatility, right?
Right.
Small caps, they just tend to have bigger price swings than large caps, so you got to be ready for a bumpy ride.
Not for the faint of heart.
Not for the faint of heart, exactly.
Okay. We also talked about how those smaller companies, they often have less access to capital.
Less access to capital, yeah.
Than those bigger, more, established companies.
Yeah, it's like, a small boat trying to navigate a hurricane.
Yeah, trying to weather a storm.
They're trying to weather a storm, yeah.
They just don't have the same, resources.
They don't have the same resources, no.
Okay.
And then another risk to keep in mind is liquidity risk.
Liquidity risk, okay.
Yeah, so small cap stocks, they tend to be less liquid than large cap stocks. Meaning it might be harder to buy or sell shares quickly. without, impacting the price.
So if you need to get out of a position quickly,
Yeah, if you need to get out quickly,
you might not be able to do it
you might not get the price you want.
at the price you want.
Yeah, exactly.
Okay, so good. Volatility, access to capital, liquidity risk.
Mm-hmm.
Any other potential landmines out there?
Well, this one's maybe a little less common,
Okay.
but there's always the potential for fraud or mismanagement.
Oh, right.
Smaller companies, sometimes they don't have as much oversight
I see.
as bigger companies.
Yeah, that makes sense.
So, that can make them a little bit more susceptible to those kinds of issues.
So it's really important to do your research.
Do your research, yeah.
And make sure the companies you're investing in, they have, good practices in place.
Good corporate governance, yeah.
Yeah.
Transparency, accountability, all of that.
Okay. And then
And finally, there's the risk of dilution.
dilution. Okay.
Yeah, and this happens when a company issues more shares of stock,
Okay.
which can actually reduce the value of those existing shares.
I see.
And small companies, they often need to raise capital to grow.
Right.
And issuing new shares, that's one way to do it.
Yeah.
But it can dilute the value of your investment.
It's like having a piece of pie
A piece of pie, yeah.
that keeps getting cut into smaller and smaller slices.
Smaller and smaller slices, exactly.
Okay.
So that's something to keep in mind, especially with small caps that are growing really fast.
Right, because they might need to raise capital more often.
They might need to raise capital more often, yeah.
Okay, so we've got a pretty good list of risks here.
We do.
Things to think about.
Things to think about.
But let's not forget about the potential rewards.
Of course not. Got to remember those.
Yeah, we've talked about that historical outperformance,
Mm-hmm.
the potential benefits of those falling interest rates,
Right.
the new administration's policies
Mm.
could be good for small businesses.
Could be good for small businesses.
And, even though tech has been the star of the show this year,
The start of the show,
there's always a chance that things could shift.
always a chance.
Right.
Yeah, investor sentiment can change.
Investor sentiment.
Like the wind.
Yeah.
What if, value stocks come back into favor?
Okay.
Small caps with their lower valuations, they could be in a good spot to benefit from that.
It's like a game of musical chairs.
It is, yeah.
When the music stops, you want to be in the right seat.
You want to be in the right seat.
Exactly.
Exactly.
So what are some key things people should be thinking about when they're evaluating these opportunities?
Well, we've said it before, diversification's key.
Diversification.
Don't put all your eggs in one basket,
Right.
even within small caps.
Right. Even within small caps.
Spread your investments around,
Spread around.
different sectors, different industries.
Okay.
Reduce your overall risk.
It's like building a well-balanced meal.
It is like a well-balanced meal.
Yeah.
You want all the nutrients,
Nutrients.
Keep your portfolio healthy.
Yeah, keep it healthy.
And then, don't forget about your time horizon.
Mm-hmm.
Small cap investing, it's a long game.
It is.
So you got to be patient, you got to be disciplined.
It's a marathon, not a sprint.
It's a marathon, not a sprint.
Yeah.
Exactly. And then finally, just stay informed.
Stay informed. So
Stay informed, keep up with what's going on.
keep learning.
Keep learning. Yeah, the market trends, the economic developments,
Right.
News that could impact your investments.
So don't just set it and forget it.
Don't set it and forget it.
Yeah.
Stay engaged.
Be active.
Be active, yeah.
Okay.
Knowledge is power, right?
Knowledge is power.
The more you know,
You better.
the better decisions you can make.
Okay, so we've covered a lot of ground here.
We have.
We've, gone deep on small cap stocks, the potential, the risks,
Mm-hmm.
some key things to consider. But before we wrap up, I want to leave everyone with one final, thought-provoking question.
Okay, hit me.
Given everything we've talked about, valuation gap, potential for falling interest rates, new administration, the history of how small caps have performed, could we be on the verge of a big multi-year period
Ooh.
of small caps just dominating?
That's the $1 million question, isn't it?
It is, yeah.
I mean, we don't have a crystal ball, but
Right.
things are looking pretty interesting.
Yeah, it's like we're at a fork in the road,
A fork in the road.
and one path leads to small caps just, taking over.
Hanging over, yeah.
The other path leads to more of the same large caps kind of, ruling.
Right.
Like a financial thriller.
It is. It's a financial thriller.
It's on the edge of my seat.
It really is, yeah. And the exciting part is we just don't know which way it's going to go.
It's true. We don't.
But, for those investors out there who are, maybe a little more adventurous,
Yeah.
willing to take on a little more risk,
Mm-hmm.
small caps, they could be a really interesting option.
Interesting for sure.
Yeah.
But I know some people listening are probably like, whoa, that was a lot of info.
It was a lot.
Yeah, it was locked up.
Sir, if they could only walk away with one thing,
Mm.
one key takeaway from this whole deep dive, what would it be?
You know, I think the biggest takeaway is just that this possibility of small caps outperforming, it's real.
It's a real possibility.
It's a real possibility. We've seen it in the past. We've got this valuation gap. We've talked about those potential catalysts
Right.
that could really drive growth.
But it's not like a guaranteed win.
No guarantees in the market.
Definitely not.
Investing, it always comes with risk.
Always.
You got to weigh those risks against the potential rewards.
Right. See if it makes sense for you.
Exactly. Make sure your decisions, they align with, your own goals, your own risk tolerance.
Yeah, you got to be comfortable.
Got to be comfortable.
So it's not just about like jumping on the small cap bandwagon.
Just because it sounds cool.
Not because it's trendy, yeah.
You got to really understand what you're getting into.
You got to do your research, yeah.
Do your homework.
And, we talked about it earlier, diversification is so important.
Diversification.
Don't put all your eggs in one basket.
Never put all your eggs in one basket.
Spread them around, different asset classes, different sectors, different market caps.
So like a little bit of everything.
A little bit of everything.
To kind of help you weather those storms.
Weather those storms, yeah, exactly.
Right.
And, if you're feeling a little lost, don't be afraid to talk to a professional.
Talk to the experts.
Talk to the experts, yeah. Financial advisors, they can help you, create a plan.
That's tailored to you.
Tailored to you, exactly. That takes into account your situation, your goals.
It's like having, a guide.
Yeah, that guide.
To help you navigate those tricky financial waters.
Exactly. Make sure you don't run aground.
Okay, so before we say goodbye, I want to circle back to that Vanguard Russell 2000 ETF.
VTWO.
VTWO. We've talked about it. It could be a good investment, but let's really break it down.
Okay, let's do it.
So one of the things that makes it so appealing, especially for people who are watching their pennies, is that low expense ratio.
Low expense ratio, yeah. You're paying less in fees than some other ETFs out there, and that can really add up over time.
Right. I mean, fees, they can sneak up on you.
They sneak up on you. They can really chip away at your profits.
Yeah, you don't want that.
You don't want that.
No. Okay, and then the other big plus?
Big plus, diversification.
Diversification.
Yeah, you're not putting all your money on one company.
Right.
You're investing in, like I said, over 2,000 different small cap stocks.
2,000, that's a lot.
It's a lot.
And that helps spread the risk.
Spreads the risk.
Smooth things out.
Smooth things out, exactly. Like a built-in safety net.
Safety net. I like that.
And also, for people who are maybe new to ETFs.
It's helpful to understand they trade on stock exchanges. Just like individual stocks.
Okay.
So you can buy and sell them throughout the day.
So it's flexible.
It's flexible.
Okay.
And VTWO, because it's a pretty popular, well-established ETF, tends to has good liquidity, which is important.
What does that mean, good liquidity?
So that means you can generally buy or sell shares pretty easily without having to worry too much about the price changing just because you're trading.
So you don't have to worry about messing things up.
Yeah, you don't have to worry about messing things up.
Just by buying or selling.
Exactly. Okay, good. Good to know.
Yeah, I think so.
So let's zoom out for a minute.
Okay.
Big picture. Why should we even care about this Russell 2000?
Why should we care?
Yeah.
That's a great question. And I think the answer is that the Russell 2000, these small cap stocks, they're really exciting.
Okay.
These are the companies that are, innovating, creating jobs, shaping the future of the economy.
They're the up-and-comers.
They're the up-and-comers, yeah. The ones that are really pushing things forward.
They're the ones with something to prove.
They got something to prove. And when you invest in small caps, you're kind of becoming a part of that growth story. You're supporting those companies, the ones that are making a difference.
It's almost like being a venture capitalist.
It is, yeah, like a mini venture capitalist.
Yeah, exactly.
And of course, there's that potential for those big returns.
The big returns, yeah, we can't forget about those.
Can't forget about those. We talked about that. Small caps, they do carry more risk.
Right.
But historically, they've also delivered higher returns over the long term.
So it's a bit of a gamble.
It's a bit of a gamble.
But a calculated one.
A calculated gamble, exactly.
Okay, but as we've said, investing, it's a marathon, not a sprint.
Marathon, not a sprint.
Got to be patient.
Got to be patient. Got to have that long-term perspective.
Plant those seeds. Let them grow.
Let them grow. Exactly.
Okay. All right. And folks, just remember, This deep dive, it's for informational purposes only.
Not financial advice.
Definitely not financial advice. Always do your own research.
Always do your own research.
Talk to a financial professional
Talk to a professional.
before making any decisions.
Yeah, it's your money, your future.
It's your money, it's your future, you're in control.
You're in the driver's seat.
So be informed.
Be informed.
Be strategic.
Be strategic.
And most importantly,
Yeah.
be excited.
Be excited about the journey.
It's a journey.
It's a journey, it is.
All right, well, it's been a pleasure
The pleasure was all mine.
diving into the world of small caps with you.
Yeah, fascinating stuff.
And to everyone listening, thank you for joining us on this deep dive
Yeah, thanks for listening.
into this fascinating world of small cap stocks.
Hope you learned something.
Until next time,
Until next time.
keep those minds curious
Keep learning.
and those portfolios diversified.
Diversified, always diversified.